Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Okay, now I want to present about introduction. Nowadays, Islamic banking has existed and is well received by several countries such as Malaysia, Indonesia, and Saudi Arabia, and is considered as a viable alternative system that is able to meet the needs of the people through the products offered because citizens can choose to apply for funding from Islamic banking or conventional banking. But for Muslims, they are obligated to choose Islamic banking. Although at an early stage, Islamic banking initially developed only as a financial intermediary for the Muslim community, but now it has been widely accepted worldwide beyond the non-Muslim community and has become one of the most important components of the world financial system. Okay, next. Islamic finance has become one of the fastest growing financial sector segment as Islamic finance is less risky than conventional finance. This is evidenced by a study conducted by the International Monetary Fund, which confirmed that Islamic finance is not necessarily less or more risky than conventional finance practiced by Western countries. The why we choose Bank Muamalat Malaysia Berhad is because its risk management at Bank Muamalat Malaysia Berhad is the primary responsibility of the board for overall risk management and supervision. This involves assessing the required risk policy, establishing the risk appetite of the bank, and ensuring the risk is effectively controlled and managed. Okay, next is background of Bank Muamalat Malaysia Berhad. Bank Muamalat, founded on 1 October 1999, is a leading Islamic bank and is governed by Act 2013 on Islamic financial services. The bank is a full-fledged Islamic finance institution. It provides a wide variety of services to its clients, serving the needs of both individuals and organizations. In essence, Bank Muamalat offers services for individuals ranging from deposit account. Bank Muamalat has a national presence across a network of 63 branches. Such an internet banking solution of the bank and e-Muamalat accessible, referring to its network of ATMs, CDMs, and CDTs at approximately 240 sites. Bank Muamalat is a member of the DRB HiCom group where 70% of the bank's shares are owned by the publicly listed company, with the remaining stake held by Khazanah Nasional Berhad. Okay, next I will share for you guys the mission of Bank Muamalat Malaysia Berhad. First is our stakeholder, the people nearest to us, our clients and our workers. We respect our customer and aspire to meet financial needs through the most responsible and competent delivery. Number 2 is our society. We believe in giving back to society. It will improving the living condition of those around us. Third, environment, because it will inherit and preserve the beauty of nature, and we cherish our world and promise to care for. Next is our market-focused products and services. Focus of BMMB on consumer banking are consumer banking. Muamalat Bank provides a variety of goods and services to customers, including mortgage, cars, and personal financing. Secondly, is business banking company. Banking at Bank Muamalat serves the banking needs of both corporate, commercial, and institutional clients and financial institutions. Thirdly is our services. Wakaf Selangor Muamalat, another bank muamalat service designed to provide its customers and the public with convenience.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Azinaim bin Hazni from class IC 1105BA. Today I want to explain to all of you about risk management on Bank Muamalat Malaysia Berhad. First, risk management. Risk management is the process of identifying, assessing and controlling threats to an organization, capital and earning. The risk management process is the most important part that BMMB needs to do. Efficient risk management must be practiced by BMMB to avoid bad problems such as bankruptcy. Second, risk governance. BMMB emphasizes a good risk management process such as identifying and measuring the systematic risk. Risk control and management are prioritized to risk areas such as credit risk, market risk, asset and liability management risk, and operating risk. Organizational division within the risk management framework have three. First, business units. They are responsible for a company for taking a new opportunity to the company, such as a new business that causes risk. Second, risk management unit. The unit acts as a unit that identifies and evaluates the risk taken by the risk-taking unit. Third, risk committee. Risk committee are responsible as the primary authority to monitor, control, or accept risk within the organization. Risk appetite. Risk appetite defined as the level of risk that the bank is willing to accept in meeting its business objective. Reviewed by the board annually, there is a risk appetite framework in a very major decision-making process undertaken by BMMB. The purpose is to determine appetite, risk capability, bank target, and risk tolerance. It also identifies the level of risk, such as level of risk to liquidity, capital ratio, and asset quality.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Tengku Ahmad Takwide Bertekukaha. I am going to present about the credit risk managed by Bank Muamalat Malaysia Berhad. So first of all, we need to know what is the credit risk. Credit risk is defined as the potential financial loss caused by a retail customer or wholesale counterparty failing to meet their obligation to the bank as they become due. This covers all credit exposure, including guarantees and irrevocable undrawn facilities. So the customer or wholesale fail to repay their loan when it's become due. Next we move to credit risk faced by the bank. Among the credit risk faced by the bank is settlement and pre-settlement risk, resulting primarily from a foreign exchange risk, investment security risk, equity risk, commodity and derivative transaction risk. Okay, next we move to how a bank approach to handle their risk. What is approachment used by the bank to manage their risk? First, before the loan process, the bank will review some of the conditions that enable the customer to borrow from the bank, such as appropriate source of payment from customer, the planning of effective financing package, and the appropriate consideration of risk. So this is a pre-risk management used by the banks. We know the two type of risk, which is pre-risk and post-risk. So this is pre-risk approachment used by the bank. Next is credit organization and granting activities. The bank has divided into three departments, namely business banking for corporate, commercial and retail SME customer, consumer banking for retail individual customer, and investment banking for syndication and capital market instrument. So the bank divide their management into three departments to prevent chaos and to make sure their management running smoothly as they want.
3.3 Market risks. Market risks are defined as the potential for financial loss by financial institutions due to market price movement. Financial institutions are particularly vulnerable to market risk in the form of interest rate risk movements. For example, a bank is an intermediary between the owner and the user of either funds to ensure that all parties can profit from the banking system. The amount paid to the savers must be lower than the amount collected from the consumer. In the Islamic financial system, there is no guarantee of return or capital protection on funds deposited in Islamic banks. For example, restricted mudharabah. In BMMB have market risk management and asset liability management (ALM). Their primary objectives are to control and manage market risk exposure to optimize risk return. The market risk measurement techniques in BMMB have three. First, value at risk, which includes the historical simulation is widely used by the bank as a tool to measure the risk of loss on a specific portfolio of financial asset, limit setting activities and market forecasting. Second, sensitivity analysis. is the bank uses various methodologies in assessing the sensitivity of the bank's portfolio against change in the market variable. Lastly, and the third, stress testing and scenario analysis are used as market risk and LLM tools to assess the possible impact on the bank's performance under relevant adverse conditions. Stress tests include assessment of market funding and liquidity, rate of return risk, moving commercial risk, and currency fluctuation. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muamalat Berhad. Today, I want to present to you about operational risk management. The definition of operational risk is defined as the risk of loss due to inadequate or failed internal process, people or system, or from external event. This definition limits operational risk into two subsets, which are risks that occur from internal system mistake and risk from external event. Then, the objective of operational risk management is to effectively manage this risk to prevent or reduce the financial or non-financial losses caused by operational delays. To counter the risk, there are three management tools, which is Risk and Control Self-Assessment (RCSA), Key Risk Indicators (KRI), and Scenario Analysis (SA), and Stress Test. The risk and control of self-assessment. This is self-introduction, assessment, and evaluation of the effectiveness of all significant risks, and recording and reporting results. Then, Key Risk Indicators (KRI). Tracking and monitoring KRI can provide an early warning of areas of concern. Then, stress tests and scenarios. This is unexpected planning for possible adverse events, from payment caused by poorly arranged contract to disaster recovery and business continuity following from violence. Next, the Bank Muamalat Malaysia Berhad Operation Risk Solution is Muamalat Operation Risk Solution (MORIS) is a web-based application used as a tool in identifying and assessing risk. It also acts as a centralized loss incident database by capturing and storing loss-related data and used to detect risk exposure to key risk indicators over a set period of time.
Next, we move on to Shariah governance risk. What is the Shariah governance risk? Shariah governance risk, defined by the IFSB Guiding Principles on Shariah Governance System on Institution Offering Islamic Financial Service (IFSB 10), refer to a set of institutional and organizational arrangement to oversee Shariah compliant aspect in Islamic financial institution. To ensure the operation and business activities of the bank remain consistent and with Shariah principle and its requirement, bank has established three departments. First, Shariah Committee and Internal Shariah Organs. Second, Shariah Audit. And third is Shariah Review and Compliance. Next, we move to the internal Shariah control. Shariah compliance management is driven top-down from the board through the Shariah Control (SC), who has the responsibility of understanding Shariah-related matter in the activities assumed by the group and the bank. The Shariah control function independently and ensure the integration of compliance management. So this is the board of the internal Shariah control. You can see how their management. Okay. Lastly, we go to risk faced by the Shariah governance. Number one is Shariah non-compliant income (SNCI). SNCI is an income generated from any transactions that breaches the governing Shariah principle and requirements as determined by banks, SC, or other Shariah authority. The amount of CNCI and event decided by the SC is as follows. Okay, you can read by your own. Number 2 is unidentified fund or shubha. During the bank's daily operation, there are certain funds received by the bank where the source is not clear or uncertainty. These funds are therefore not recognized as income and they are retained in the Maslahah Ammah account. The utilization of the fund follow the similar procedure set for the SNCI fund. That's all. Thank you.
Then, the solution to overcome it is strengthen supervisory oversight financial holding companies to avoid risk license safety and well-being financial institutions that may arise from other entities in the financial group. Then, formulate a comprehensive legal framework for conventional and Islamic finance responsibility system. Thirdly, promotes long-term sustainability and increase TFI ability to support its mandate. These include enhanced risk sharing and accountability arrangements between DFI and government. Lastly, work with central banks and other supervisory authorities to protect the stability of the financial sector related to the region and internationally.
Okay, last but not least is the conclusion. In conclusion, as we know, Islamic finance is the most successful finance in the world. According to statistics released by Bank Muamalat Malaysia as of June 2007, total banking assets Islam is 143.7 billion ringgit. The total deposit is 107.5 billion ringgit and total financing is 81.5 billion ringgit, where on average Islamic banking has dominated 13% in the national financial market. Okay, for the Bank Muamalat Berhad, we can conclude that the structure of mechanism for risk management in this bank is built on a basis of a structured governance process that defines the roles of the bank's risk management activities, the control of the bank's activities and the governance of the bank. For example, for the risk governance of the Bank Muamalat Berhad, it involves assessing the required risk policy, establishing the risk appetite of the bank, and ensuring the risk is effectively controlled and managed. The board manages risk management of the bank through a transparent governance framework that includes committees at the board and management level with varying functions and responsibilities. So that's all from us. Thank you, madam.